Okay, so did you see UltraTech Cement's latest financial results? I mean, they've been making some big moves.
Yeah, I actually did. It's pretty interesting stuff, especially with their recent acquisitions. It looks like they're really aiming for significant growth.
Right. Like with the India Cements Limited, they now own over 55% of it, which is huge. And what's the deal with that open offer they made to the public shareholders?
Well, the open offer is for the remaining shares, basically. So they're aiming to consolidate their control even further, and they'll be accepting shares on a proportionate basis since there were more shares tendered than the offer size. It's like trying to complete a puzzle, and they're grabbing all the pieces they can.
That makes sense. And what about the Kesaram cement deal? Are they still working on that one?
Yes, the Kesaram deal is still in progress and they're waiting for the transfer approval for the mines. Once that's sorted, their financials will be, consolidated with UltraTech's from April 1st of 2024. So it'll really change the numbers overall.
Yeah. So basically, two big acquisitions at once, right? That must have really impacted their capacity numbers.
Absolutely. With the ISIM acquisition, their consolidated capacity now stands at 171.11 million tons per annum. So that's a substantial increase. And also with ongoing expansion projects and the Kesaram deal, they are targeting 200 million tons by financial year 2027.
Wow, that's a massive jump. It seems like they're really scaling up. And how was their performance in this last quarter specifically?
Well, their domestic sales volume grew by 10% year on year, and they also achieved a capacity utilization of 73% during the quarter. So that's pretty good.
Okay, so sales are up. What about their costs? I mean, with all that expansion, their expenses must be through the roof, right?
Actually, it's a bit mixed. Their energy costs were lower by about 13% year on year because fuel costs went down, but other expenses remained relatively high. It's kind of like a seesaw. Some costs go down and others, well, they stay up.
So some wins and some challenges then. Did anything interesting happen on the sustainability front?
Yes, actually, they've started using inland waterways to transport raw materials, which is a big step towards reducing their carbon emissions. It's like finding a new, less congested road to get where you need to go and a much greener option.
That's innovative, and they even began 16 megawatts of WHRS capacity. What is WHRS exactly, though?
WHRS, or Waste Heat Recovery System, basically captures the waste heat from their processes and converts it into power. It's like recycling energy that would otherwise be lost, reducing the company's reliance on traditional energy sources.
Ah, okay, that makes sense. And it's definitely a good move for sustainability. So their green power is up how much for the quarter?
Their green power mix for the quarter reached 33.4% of their total power usage, which is actually a pretty significant increase from last year. So their efforts are really showing.
That's a huge improvement. It seems like they're investing a lot in environmentally friendly practices. So they talk about a net zero goal by 2050, right?
Yeah, that's their long-term target, and they are trying to achieve it through multiple initiatives like increased use of renewable energy, waste heat recovery, and even deploying electric trucks for logistics. It's a pretty ambitious plan, but they seem committed, like aiming for a marathon.
I guess that's a long race they're running. What else stood out from their report? Any surprises?
Well, their premium product mix has also increased by 15% year on year. So people are buying more higher value products, and their UBS outlets are also contributing nearly 20% of their domestic sales volume. I mean, it shows they're expanding their reach and diversifying their offerings.
It sounds like their retail strategy is working out well. And I saw they got some awards too.
Oh, yeah, they were named Brand of the Year at the ET Brand Equity DigiPlus Awards, and they also won some other awards for their digital and content marketing efforts. So, definitely good recognition for them. It's like getting trophies after a good sports season, right?
Yeah, it sounds like they're hitting all the right notes, both in terms of expansion and innovation. So, what about their financials for this quarter? Anything interesting?
Their consolidated net sales were around 16,971 crore rupees, up from last year, but their profit after tax was lower, about 1,470 crore rupees. It seems like the increased sales were offset by some cost pressures this time around.
So, increased sales, but profits took a hit. Interesting. What do they say about the future outlook?
They are pretty optimistic, actually. they're expecting a sustainable volume growth of 7 to 8% going forward, with increased government spending on infrastructure and housing projects, and also increased rural and urban demand. So they are banking on the India grows narrative.
That does seem like a promising growth forecast. I guess with all that building, they'll have a good market for their cement,
Exactly. They're positioning themselves as a key player in India's development journey. It's like they want to be the go-to supplier for building the new India. So that's their focus.
So to summarize, UltraTech is expanding rapidly through acquisitions, boosting its capacity, and adopting more sustainable practices. So that's quite a lot, right?
Yes, definitely. And while their profits saw a dip this quarter, their long-term outlook is still positive due to expected infrastructure growth, and they're also focusing on green initiatives and innovative product strategies, and also have a good brand image. So it's a mix of expansion and sustainability.
It seems like a strategic path they're on. What about the debt they have taken on for these acquisitions?
Well, the gross debt has increased to 19,384 crore rupees. However, their net debt is around 15,283 crore rupees. After considering the treasury surplus, it's common to see companies leveraging debt for expansion, especially during acquisitions like this.
Okay, so their debt has increased significantly. It does make sense considering the acquisitions. And what about their earnings per share?
Their EPS was around 217 rupees based on trailing 12 months. This shows that while their immediate profits had some headwinds, they are still maintaining a good level of profitability per share. It's kind of like trying to maintain good per capita income even when population is increasing.
Right. So despite a few challenges this quarter, they're still making a strong effort to keep growth in line with their overall strategy.
Yes, it's like they're navigating through some rough patches while still trying to expand their reach. They seem to have a clear plan and are taking the steps to execute it.
That's a good way to look at it. With all this activity they have undertaken, what about the regulatory aspects? Are they meeting all compliance?
According to the report, they have received approvals for the acquisitions, and it seems that they are complying with the listing regulations. They've mentioned all the approvals they have got, so they're keeping things above board, I guess.
That's important to keep in mind. And it seems everything is in line. And did you notice anything about their ready mix concrete business?
Yes, their RMC business is doing well too, with a 14% increase in both volume and revenue year on year. It's good to see that segment is also showing solid growth and is an important part of their portfolio.
Right. So it's not just cement, they're also making strides in concrete, which makes them a very diversified player. So did their operating margins see any changes?
Well, their operating margins did see a slight dip this quarter, which is common when companies are absorbing costs of expansion. It's like a brief hiccup on their growth journey, and overall their margins are still respectable.
So a bit of a balancing act between growth and margin management, right? So one last point, I saw that UltraTech was also leveraging inland waterways. Is this also for cost reduction?
Yes, the move to inland waterways for transportation of raw material is primarily for sustainability and also for cost reduction by reducing reliance on roadways and railways. So it's a win-win approach for them, I suppose.
Yeah, that's pretty smart. It's great to see them thinking long term. Well, this has been a pretty insightful look at UltraTech's financials.
Yeah, definitely. It's always fascinating to see how these big companies manage growth while also addressing challenges. If you all enjoyed this conversation, make sure you hit like and subscribe to our YouTube channel for more such conversations.
Absolutely. And thanks for listening. What do you think? Will UltraTech be able to achieve the ambitious 200 million tons per annum capacity by financial year 2027?
That's a great question, and it'll be interesting to follow their journey over the next couple of years to see how it all unfolds.